Hello everyone, it's Red with RedDragonLeo.com, and today is Monday, November the 22nd, 2010. Let's get that right. Yeah, well, you know, it feels like the year 2000 to me. It seems like the last 10 years just flew by. I just woke up one day and you know, it's a new year, a new decade, I should say. Anyway, looks like it pretty much played out as I expected today. Let's see, we're on Cobra's chart. Let's go over here to the 15-minute chart for Ron Walker. The only thing that it didn't do was I thought we would gap up and then sell off in the regular session. They did run the stops in the pre-market. They were up around 1206 or something, or I would guess. It was 1205 on the ES. So that's got to be on the SPX 1207 or 1208, because it's a little bit higher. It's a few points higher on the SPX than it is on the ES. So the ES was up in this range in the early morning session, and then they tanked it and opened it up, gap down, which I thought was kind of odd. But I guess that, you know, all the stops that they needed to take out were mainly on the ES and not on the SPX or the SPY. So maybe that's why they did not gap it up here in the regular session. But they did gap it up, but I was wrong on it being the morning session only, or the pre-market only, and not the regular session. So anyway, on a regular session, they sold it down, put in a bear flag, sold it down again, and they never did close this gap, which seems unusual. When they usually get down that low, they close that gap. But I think it was probably because they were hitting a trend line that was more powerful than yeah, I think it's from here. I think if you draw a line here to here, and as you can see, I think that was the more powerful thing holding the market up, is if you were to draw a line from here straight up through here and connect it to here, and it would connect to here, and bingo, it hits right there. And that's probably the reason they did not pierce it, and because it was, you know, overall still light volume on the day, with only let's see, 181 million on the SPY. You know, that's not too bad, but that's certainly not above 200 million. We have 200 to 300 million on really big down days. So that just kind of goes to show you that it was a controlled technical sell-off. The charts actually worked this time. What do you know? They do that to us every now and then. You know, the gangsters, they'll allow us to get comfortable reading the charts and saying, hey, these guys know what they're doing. They're reading the charts right, and everything is going rosy, and then all of a sudden you place your bet, and boom, they just pull the rug out from under you, and no longer do the charts work. They just reverse it and go just the opposite of what you think it's going to be. Just when you think there's going to be that big move, no, 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 no. They jerk it right out from underneath you. But today worked out actually picture perfect. I posted on the blog that I seen an MA pattern for me, and you can't really see it here on the 60-minute, but if we go over here to the 15-minute, it's more apparent. You got the M with the left side of the M and the down in the middle, and then the right side of the M, and you would go, I guess, basically down to here would be the right side of the M. If you started here and did this, would be your M. This was a bear flag forming, as well as the A pattern. It didn't go as high as it usually does. Usually they go up a little higher, and then they sell off past where the bottom of the M is. So it did kind of play out. And actually, I guess you could call the gap down and then the move up that filled the gap, I guess you could call that the part of the A. as long as it doesn't go higher than the tops of either one of the left side or the right side of the MA pattern, specifically the M, as long as it doesn't go higher than that, the A can actually go up right close to it. As long as it doesn't go higher than that, it fulfills an A pattern. And that's pretty much so what it did. So the morning gap down formed the right side of the M. And, sorry. And hello. Okay, sorry about that. So anyway, the MA pattern again was just like this, and it down, and that could have been your right side of the M, and then up with the A, and then down, and then it formed a bear flag and continued on down, and that fulfills the MA pattern. So, but it was also pretty much a technical, move here, not so much on the 15-minute chart, but on the 60-minute chart, which was what we were looking at earlier. We were about here, and I kind of thought that we would roll down and put in a lower histogram tower, and or a higher low, and then roll back up, and that's exactly what we're doing. So as you can see, we're down here, and we were down here at negative 7.5, and over here we was up at positive 7.5. So basically, it went up here and went down, and now it's going to continue up higher on Tuesday and Wednesday, I suspect. Just based upon this pattern. And you can see the M a little better here, obviously. And now, here's the thing. If it does not take out this top here tomorrow, then it could be a little bit larger MA. Because this here is also forming another A on this larger MA. This one on the 60-minute chart. So, being that tomorrow's light volume again, we're in holiday season, I fully expect them to just gap up above this. I really do. I don't expect us to roll over and sell off, because the measured move on that, just like this smaller M was, it actually started about, well, actually I guess about right here in this area, and the M, the center part, and then down to here. And then we had the up move, and then down. You can't really see it on the 60, but again, back on the 15, you can see it. Or here, you can even see it on this 5-minute chart pretty easily. So it's basically here, center, left side, or right side, up for the A, down, bear flag, and then the continuation. This move down right here on the MA pattern usually equals either the left side or the right side move. In other words, it's an equal distance. That makes sense. Sorry, getting a little confusing here, but I think you get the idea. So equal distance. So if you went from here to here, down, up for the A, your equal distance, this whole move from the top right here down to here is usually double either one of these sides, either the left side or the right side, generally speaking. So we're forming another MA again. So this one would be a larger pattern, which would be from down here's low up and down to today's low. That's still another M, and we are forming an A. So the measured move on that, should we roll over and go back down, the measured move on that would be twice this length. So it would go down approximately down to here, 1172. So that is a possibility. Do I think it's going to happen? No, I don't. I think it's going to fail. All it has to do is get up higher than this 1199 or 1200 area. All it's got to do is basically gap up above it, and it's done. It violates the MA pattern. And so do I think it's going to do that? Yeah, I think with the light volume, it's going to. Even though this looks like it's ready to roll over because it's topped here on the stochastics and appears to be topping, it can keep on going higher. Remember, this is below zero. This is not up here in the 5 area or something. It's not up really overbought. It's just now coming up. So, and then the larger charts are supporting it. The 30-minute is pushing up, as you can see. And since we've had 1, 2, now almost 3 attempts at this, the resistance gets weaker every time you hit it. You just keep banging on it, and eventually you pop through it. So the easiest way to go through this resistance is not to go through it, but to go over it. So that's why they generally gap up stuff. So as you can see here, the 30-minute chart, which is more powerful than the 15, is curling up, and we're still got room to run up on this one, on the full stochastics. That tells me that, you know, at least what the charts are saying. Again, you know, we all know how manipulated this is, but it's manipulated to the bull side. So the charts usually work on the bull side. It's the bearish side that they don't seem to work on. So since this is pointing to a bullish condition, again with this we've got positive divergence. We're at the 0 mark there. I would expect it to go up here and put in a lower histogram tower over the next couple of days. And so I do expect to run up higher. How high, I don't know. Who knows? The pattern on this, you know, if this was an A move or maybe a B and now we're getting ready to go a C, we could go up here and test that. We could even go here. I mean, it's hard to say. But I think by the end of this week, we're going to put in a temporary top at least, and then we'll have a larger move down. So assuming that we don't take out this top and we just come up here shy of it, then I think we're going to have possibly another wave down the week afterwards. And then we'll have to take it and see. So basically, it's like this. Wave 1, a wave 2, and a wave 3. Now, if we're still in a bull market and P2 is primary wave 2 is completed, then it will be a 1, 2, 3, 4, 5 move. If it's not and we're still in the rising primary wave 2 going up to the 11,800 fake print on the Dow, about 1260 to 1280 range on this. If that's the case, we're going to continue higher, then this should be a 3-wave move down. It should be 5 up, 3 down. So that would be an A, B, and a C. And where would the C end? Well, you know, a nice point of resistance is right smack dab there where it's getting ready to have a necktie of support. But of course, by the time it gets down there, it won't. This will probably cross over, but it is today at least. Obviously, I don't expect that to happen tomorrow. So basically, I am expecting a move on up, and I don't know if it's going to take out this top or not. I don't think it will. I think that they will fall short of it. At least right now, I think they're going to fall short of it. And then next week, after this holiday is over with, I think we will have a move down for the end of first week of December and the end of November. And then once it finds support at whatever level they allow this thing to run down to, you know, obviously this is going to curl up, and it might be here by the time that happens, which coincides with a lot of support right there. So maybe that's as low as we get. And if that's the case, then from there on out, then they'll make their push up into January to get the final top for the 11,800 print, the fake print that we got. By late January, it should be done. This market should be done. And you can see we're already at 1, 2, 3 weeks above the 200-day moving average. So it has confirmed that, at least on that part, even though it's running down. But again, you don't really expect this to just roll straight down. You kind of expect it to go down, curl back up, and then make, you know, a negative, two lower towers. You know what I'm saying? The second one being lower than the first, and make negative divergence on it as it rolls over. So that's kind of what I'm expecting to happen. So all signs are pointing up for tomorrow. Here, the daily again curling up, pointing up on the daily, 60 pointing up, and here's a longer time frame too of the 60 also pointing up. As you can see, it's been oversold right here as it was going down, and now it's losing all the power on the selling side. So it's curling up too, and should probably put in some bars above the 0 mark as well. And same thing on the 30-minute, it is pointing up, and the 15 really isn't giving it much direction. It's still pointing up here, but it's halfway through its move, it appears to be. And 5-minute, really, it's pointless to look at the 5-minute unless you're a day trader. So anyway, that's what I'm expecting. As you can see, the Qs didn't even put in a bearish, a negative close. They actually closed positive. So it's just light volume, folks. You know, stay out of the market or take very small, long positions. I wouldn't be going short just yet. You know, just hang in there. This thing's going to roll over and tank soon. for us bears at least. So good luck, everyone.